What's going on here in these numbers?
Well, I think we're in the trough. It feels like we're in the trough. So, in the month of August, we actually beat the 3-month rolling average on the PMI. I look at this stuff from a demand and output and an input standpoint. The real story this month was on the output side. So as Mike mentioned, production was stable at 50, which means that revenues are probably stable too for the month, down a little bit from the month of May, because June and July had a bit of a recovery, but we seem to be slowly crawling back on the demand side. Customer inventories were about right. The better thing is that backlogs actually showed a movement above 40, which for the first time in about 10 months, we've seen that. The big story here, like I said, was on the output side, production. Employment didn't come down to the same extent that it did in the July timeframe, but it's still easing. And the panelists' comments indicate that rather than using layoffs to get the headcount down to a lower level, there seemed to be a much bigger emphasis in August on attriting down, which is a much slower process and more in line with having output meet the demand cycle. Inputs are not an issue. Inputs are still very accommodative. And we can talk a little bit more about the inventory number in a minute.
And in terms of climbing out of the trough, if we're in the trough, given the slow speed at perhaps some of the employment changes that are happening, what will the speed be, again, of getting out of the trough if that's where we are right now?
Right, so we need supplier delivery number to stiffen up to get above 50. Obviously, we need that new order level to get above 52. That'll then start to drive demand back, and the pressure will be showing at the supplier level. One of the reasons why our number is so low is that the manufacturing inventory number is sitting at a 44, a historical low, which I've been saying now for the last 6 to 8 months that they've been managing their entire supply chain inventory very well. This is just one more indication that people are still positioning themselves for an uncertain future, but in any event, it's putting them in a great position to respond when demand starts to come back. I have no idea how long we'll be in this trough, but we've been running around 47 plus or minus for 4 to 5 months. I think we're in the trough. So, given any external influences that don't impact the course, we're probably looking at a slow build out here.
Do I worry about the prices paid moving up so much?
Well, not yet. I think I would have liked to see that number down in the low 40s again for the second month, but still contracting kind of indicates that we're at nearly an equilibrium between where we were and where we want to be. I think there's a lot of arguments going on now at the factory floor level about what people should be paying for prices. The conversations have started about 2024 because everybody has started their budget season now and they're trying to figure out what their profit plan is going to be, and a lot of that has to do with what the input costs will be. So I don't see prices collapsing outside of the the commodity stuff, maybe easing a little bit, and cycling probably more likely than not. But it seems like we're at a price level now that is probably positioned for the next 6 months.
Where are you seeing construction spending the most robust? Tim, what's leading this?
Well, we're seeing more and more activities, especially in the machinery area and then the fabricated metal products area that are high feed-ins to construction. We're starting to get more comments around factory build-outs and capital investment around the infrastructure plans as well as the CHIPS Act. So it's now starting to finally show up. It took a little while, but I expect that to build with some momentum as we go into 2024.
Hey, Tim, this is a totally unfair question, so I'm totally going to ask it. The market has been taking the data as confirmation of sort of a soft landing, Goldilocks scenario, that the Fed doesn't necessarily have to do anything more, et cetera. Does the manufacturing data read that to you?
Well, I would agree with the soft landing thing. It kind of feels like this has been a soft landing. If it feels like manufacturing is in the trough. I don't see anything that's going to turn it more negative. In fact, everything kind of indicates that things will be a little bit more positive. But I can't really answer that last question for the Fed. We'll see how they take this data and what they do with it. That's a much longer term game. But it feels like we're sitting here, and we have been sitting here for quite some time, in a slow contraction, which I think in anybody's definition would be a soft landing.
Can we get back to the inventories question? Tim, what sort of comments have you seen there in this report?
Well, it continues with the overordering, which is pretty much cleared up. There's still a little bit out there, but nowhere near where it was 9 months ago. Customer inventory levels, our panelist customers, are at the too low of about right, the low end of about right, which is good. It's not great, but it's good. So, that leaves supplier inventories as well as our manufacturing inventories. 44 is a pretty strong contraction number. I mean, our manufacturing inventory number generally hangs between 48 and 52.
Yeah.
And here we are now down at 44. when there's lots of pressure on everybody's part to get revenue. So I think it just indicates that we've done a really good job, and the Fed has actually supported this by a year and a half worth of slow decline. We've been able to clean up that entire supply chain inventory to the point where our panelist companies are still contracting inventory at a time when things are really slow. You'd think it would be growing. So I think that's really positive. The only thing we don't really have visibility on is supplier inventories, but the fact that they're delivering faster would indicate that there's more inventory in the supply chain. But I don't think it's overwhelming.
Hey, Tim.
Because if it was overwhelming, they'd be pushing that inventory to their customers.
Hey, Tim, before we let you go, United Auto Workers are potentially could be striking. They're asking for a lot in an increased pay deal and labor contract. Are any of your industries or companies talking about that, worried about that, thinking about that?
A lot of companies are concerned about it. Last month we had not only the auto workers strike, but also the potential UPS Teamsters strike. The latter one got resolved successfully. I think there was some pretty significant price wages in there, but that would have impacted every sector across manufacturing and services. In the case of automotive, it will be limited to the transportation equipment and some of the supporting industries. Transportation equipment has been our strongest performer for the last year, so I'd hate to see that get knocked off the rails. But we had a lot of panelists' comments concerned about the potential for a strike. It seems like both sides are fairly aggressive here. Hopefully they'll see some common bonds and get to a resolution. But most likely that's going to be a significant wage increase on the automaker side.